So today we're going to start our next lesson, lesson number 2. That will be for the professional ethics, and that will be behaving an ethical manner. So first chapter we have seen, we have understand the ethics, how it work. Now today we're going to see some situation, some scenario, and we have to say what will be the approach for us and what we should do based on that situation. Also, we're going to see some safeguard from this chapter. So, if there is some threat raised, how are we going to reduce the risk to an acceptable level? So, let's have a look the chapter overview. What we have from here. So, on the chapter overview, we can see the few things. The first thing we have here, behaving an ethical manner, part 1. So, we'll have part 2 for the next chapter. Then we have professional appointment. So the professional appointment is all about before we accepting a new client, what is the procedure we have. We're going to see this from this chapter. Then we have a fee. So we're going to see what is the relevant fee that could have impact ethically for a for an accountant. For example, let's say we have one very big client, for example, Tesco, for example, Sainsbury. They could be one of our very big client because they pay a lot of money for the services. Now, before before we decided, are we depend on this client, we have to have a clear policy and the procedure. Now, for example, let's say we have a lot of client, we have a 10 client, and all the client is very small. So we earn a very little amount of money from this all client, but we have one client, that client is really big and they pay a lot of money to us. So if this is the situation, maybe we are depend on that client. So that will have a impact on our decision. For example, if for any reason, if we understand the client going to leave us, maybe we'll have a negative impact on that, because we are highly dependent on that client. So this type of situation we're going to see from this chapter. Also, we're going to see something called contingent fee. Now, the contingent fee means it's a contingent liability type. So for example, let's say if someone said, if I win the case, I will give you £5,000. So this is basically the outcome. The fee is depends on the outcome. So when the fee is depends on the result, this is called contingent fee. For example, if I go to a lawyer, and if the lawyer told me, okay, this is the fee, but I told the lawyer, I said, like, if you win the case, I'll give you £10,000. If I lose, I'm not going to pay you anything. So the result, the fees will be depends on the result of the decision or outcome of the uh, situation. So this is not allowed, this is prohibited. We cannot say, if this is this, I'll pay you this. So if any client come to us and said, I will pay you this money, and if you can keep my tax this amount, so if you can keep my tax up to £5,000, I'll give you £2,000 extra. So if anything relevant to the outcome of the result, then this is called contingent fee. So contingent fee is not allowed, is prohibited, because we cannot do the work based on the outcome. Outcome could be anything. The fee cannot be decided based on the future outcome. And then the next one we have here, safeguard. Safeguard means, like, how can we protect ourselves? How can we protect ourselves? There will be a lot of threats, and against this threat, how can we protect ourselves? For example, let's say I'm in a situation and someone tried to bribe me, someone tried to give me an expensive gift, and on that situation, how can I protect myself? Because I cannot just resign every time, isn't it? For example, if a client said, I want to give you some gift, and the gift is really expensive. For example, someone bring a very new car for you, so they might have a intention inside, like if you take the car, you will do something for them. Obviously, like if I know they're trying to bribe me, but it's not like always I have to resign. So I have to see the situation, and I have to reduce the risks to an acceptable level. So this is basically called safeguard. Now the safeguard have two area. The first area is members in a practice. Members in a practice means when we work as an accountant. Let's say on the street you see there is a lot of accountancy firm. It says ICW, ACCA, charter accountant. So basically they don't work for anyone, they work for themselves. So all the businesses, self-employed, partnership, they come to them and they prepare the accounts, they prepare the self-assessment return, they prepare the tax return, they prepare the VAT return, all of them. So this is called member in a practice. So if you work for yourself, if you open an accountancy firm, if you open a practice, it's called member in a practice. So when you are working in a practice or you open a farm, so situation is could be different, or you are a sole practitioner. So for example, you're just self-employed, you are accountant, but a self-employed, you just work for yourself. So you work for the people, you provide services for the other client, but you don't work as employee. So this could be treated as a work member in a practice. On the other hand, we have a member in a business. Now, the member in a business means when I work as employee. For example, Lloyd's Bank, they have internal accountant, isn't it? So if something they have, the big business, if I work as employee, as an accountant, so I will be members in a business. So when I work in a company as an employee, I'll treat myself member in business. If I work for myself in a practice, I will call myself practice member in practice. So there are little bit difference for the safeguard purpose. For example, when we work as employee, the company have some policy and procedure, and every single employee they have for that company, they have to follow this policy and the procedure. But when we work as a sole practitioner, when we work as an accountant individual, we don't have too much policy and procedure. For example, let's say if we work for a company, the company said if you see any unethical situation, you have to report to the nominated officer. Or if you see someone is involving with the money laundering, you have to involve to MLRO, money laundering reporting officer. But when I work for myself, let's say I have a small farm in Oxford Street, and one of the client came to me, and based on the documents he provided to me, I have found this guy is involved with the money laundering. Now, I just work for myself. I work in a practice. I'm a sole practitioner, so I don't have a audit, the ethical committee. I don't have the MLRO. So to whom I should report? That time I should report to NCA, that is National Crime Agency. So two things: if I work in a uh, uh, business, if I work as an employee, then I have to inform to my superior, my manager, the nominated person, the owner, because I work for someone. If I see any unethical situation, I'm not going to tell it straight away to NCA, because I want to tell my boss. I want to see how they handle the situation first. So I'm not going to tell it straight away to NCA. But if I work for myself, if I work as a sole practitioner, or if I work as a sole trader or in a practice, maybe I don't have any ethical committee, I don't have any MLRO, so I don't have any choice to inform uh, NCA, National Crime Agency. So I don't have anyone superior because I work for myself. I'm in a practice, so I inform to NCA. But if I work as employee, then I inform to the nominated person. So there's a little bit difference we're going to see from here. So let's have a look what we have inside of this chapter. There is one more thing on the top is called the Money Laundering Regulation 2017 require members to perform customer due diligence on certain client. Now, this word due diligence is a very common, especially in the audit side. So everywhere we see this one, due diligence, due diligence. Now, the due diligence means checking your customer, so before you perform any work. So for example, one of the client came to me and said, can you do this work for me? So before I accepting this client, I want to do some check. So I want to look at from where this client coming from. I want to check with a previous accountant. I want to check what happened with the previous accountant. Obviously, like if have an issue, the previous accountant want to tell me, I will be aware of that. So I want to check his identity. We're looking at the passport and any photo ID. So this is called due diligence check. So before I accepting the client, I check the client previous history. I want to see what type of client he is. How can I do that? The first thing, I confirm his identity by looking at the passport or any photo ID. And after that, I contact his previous accountant. I will ask him, why did you left your previous accountant? And he might say, oh, he wasn't very good. He was done this and that. He might say anything, but I'm not going to believe him. So before I perform any type of work for him, I will send an email to the accountant. I will tell him, is there anything I have to concern about this person or concern about the new client? So if there any concern, the previous accountant tell me, I have to consider that. I'm not going to take straight away any client come to me. That's for the new client. Even if we have existing client, for example, you have a client and this client have a chicken chip shops, so he have a very small chicken chip shops, and after that he decided to buy Sainsbury. Now suddenly he jumped from one business to another business, and the investment is really huge. The investment is really big. Even though I know this client already because he is a small company, but now he's making a big investment. Before I accept this proposal, I'm going to do this due diligence check again. So this due diligence check will confirm me should I accept this work for this person or not. So this word due diligence is basically checking your client before you accept the work. All right, this is all we're going to see from this chapter. So let's have a look. Let's move on inside of the chapter, try to see some example and try to understand more. So there are a few things here, the behavior. Let's have a look quickly that. So they said acting with transparency, honesty, fairness, with discretion. Behaving in an ethical manner involves acting appropriately and therefore with transparency, honestly, fairness, and discretion. We can use these qualities to decide what constitute appropriate behavior in any given situation. Ethical matter often require the use of personal judgment as to the right way to handle them. So we have to follow some guideline before I decide it is right or wrong. For example, they said transparency. This means that presenting information clearly and with not withholding information. So the information has to be very transparent and very clear. And also you can say the information need to be complete. For example, if I said someone, I will see you tomorrow at 10 o'clock. Now this information is incomplete because I didn't say tomorrow 10 in the morning or tomorrow 10 in the evening. So information has to be very clear to the person I'm saying. Then the next one we have the example. They said honesty. What is the example of honesty? This is a very basic thing, but still we need to do it because we need to understand what exactly it means from the ethical point of view. The honesty said this involves being truthful and not trying to mislead or deceive other. Example, taking sick days when you are not sick is a dishonest. So for example, yeah, you are not sick but you think like this year I didn't take any sick leave, So why not just take some sick leave? Or for example, you want to go somewhere, you just call your employer and you said I'm sick. So rather than saying anything else, you just said I'm sick. So this is kind of dishonest. Then we have a fairness. This means treating others equally. So you have to ask yourself, does it fair? For example, you don't look at what type of person he is, where is he from, what is the color, is he my friend or not, do I know this person personally? So you don't consider all of this. You treat everyone equally. So this is called fairness. Then discretion. So discretion is this involves being diplomatic and sensitive to others people right and feeling. So this is basically is involved with like sensitive to others people right and feeling. So how the other people will feel. So you have to consider that. So for example, let's say you're talking to your parents, and that time you have a phone on your hand. So you talk to your parents and you have a phone in on your hand. So it doesn't look like it's you're giving some respect. So if you're talking to a teacher, you're going to meet someone, and that time you are looking at the clock, it means like you're in rush. So it's like kind of the feeling you give to the other person. This is discretion. Let's have a look a few examples here. The activity. Let's have a look who you can answer this or not. So the ethics is based on two things. One, the fundamental principle. That's that one we have discussed last week. That is Dr. Pico. So professional behavior, integrity, confidentiality, and competence and due care and objectivity. This five thing is the fundamental principle of ethics. And the threats to the objectivity. If you remember the threat, self-interest, self-review, intimidation, familiarity, and advocacy. So this, if you know these two things, you know 75% of the ethics, because all the ethics is relevant with either fundamental principle of the ethics or the threats to objectivity. And if we know the threats, we can find the safeguard. All right, let's read this question, activity number 2, behavior and appropriate action. So let's have a look at that. It says Sona is a member in business. She has recently employed Harry as a new trainee accountant. Harry regularly check Facebook during the working day. So what's happening here? There is a new person, Harry, and he's working. And during the working time, he regularly check his Facebook. So we have a two question here. The first one we have here, what is the appropriate course of action for Sona to take? Report to the AAT, dismiss him, discuss this with him in private and ask him to refrain from logging onto the Facebook during the working hours. So this is kind of, you see, the ethics is not very hard and soul thing. It's kind of like the ethical thing. How do you feel this thing? So our action will be first we discuss with him. So it's not going to be very appropriate like just dismiss him like because of uh, he's using the Facebook. So you're going to discuss first and we'll see how it goes. We're not going to dismiss him very immediately. The next one we have here, if Sona choose the course of action selected in part A, that is discuss, what behavior is she demonstrating? So what behavior is she demonstrating? So demonstrating here is a discretion because is relevant to the feelings of the other person, isn't it? So this one is relevant to discretion. If you remember the discretion, so that means this involves being diplomatic, sensitive to other people right and feeling. All right, the next point we have that we're going to discuss, safeguards to protect against threat to fundamental principle. Now you already know the fundamental principle, so that is the Dr. Pico. And this question is asking, activity 5 is quite long question, but we try to read the question and we try to see what type of threats is involved, because the question is asking 5 threats to the fundamental ethical principle. So 5 threads. So we have a different type of threads. We have a self-interest, we have a self-review, intimidation, advocacy. So when I'm going to read this one, we can stop and we can say, oh, this is the reason, this is this thread. So let's have a look and try to look for 5 thread from the scenario. So Ella is employed as a buyer for a high street chain of fashion store trading as match and clothing. As part of her role, Ella has discretion on the supplier to use and the goods to purchase. Due to the number of stores that match and patch uh, clothing have, order quantity and value can be substantial. Substantial means it's really big, is huge. Match and patch clothing has problem in sourcing enough current trend garments to cover next season demand. So the demand is really high and they are basically struggling to fulfill the demand. Ella's supervisor, Jake, has mentioned to Ella that if she does not manage to purchase enough goods for the next season, then she will be asked to leave the company. So there is a threat here, isn't it? So we found one threat. So they said if you cannot find enough clothes, you have to leave the company. So it's a threat, isn't it? What type of threat it is? So we found one. So we can say this is a intimidation threat. Intimidation threat. Intimidation threat. Now, what is the intimidation threat? Intimidation threat is like when someone give you pressure. It could be anything. For example, physically, mentally, because of the you losing the job, because of your fees, for any reason. If you feel pressure, it is called intimidation threat. All right, very well done, Sima. Very well done, Andrew. Very good, Esther. So we keep reading. We found one. We're looking for 5 threat. The supervisor made it very clear to Ella that she could easily be replaced. Fortunately for Ella, she has an uncle who has an import and export business who has suggested that he would be able to provide Ella with all the goods that she needs to find from the overseas. The good news, the goods that the uncle can supply will be last year style and would be slightly more expensive than can be purchased from other suppliers. Okay. The good news is that Ella's uncle will pay Ella a commission 50 pence per garments. Is there any threats here? Because Ella buying from the uncle, an uncle will give some commission 50 pence per garments. What type of threats we can see here? So Ella have now her own interest to buying the cloth, isn't it? So this one will be Ella will get her own benefit. So this one we can say that will be our self-interested. Very well done. So this is the self-interested. The reason is Ella will get some personal benefit from this transaction. So self-interest, self-interest. So we have two now, intimidation and the self-interest. All right. So all right, I think Hande, I'm trying to speak a little bit louder. Hopefully it will be better. Okay, so we have the next one. We have Ella has taken up the next point. Ella has taken up her uncle offer and has purchased 1,000 garment from him. Okay. Normally, when a supplier send an invoice to match and patch clothing, the invoice would be checked by Jack before the payment is authorized. However, as this invoice is from a family member, Ella checked the invoice herself and sent it into the accounting department for the payment. What type of threat is here? Ella received the invoice and checked herself and didn't send for the authorization, straightway sent it to the accounts department for the payment. So we have self-review threat here. Very well done. Self-review. So self-review threat is the threat when we check our own work. This is self-review threat. All right. The next point we have here, the accounts department has refused to make this payment on the ground that the invoice has not been properly authorized and brought this breakdown in process to Jack's attention. When Jack asked Ella why this invoice had been sent to the accounts department without his authorization, Ella justified this is by explaining this was done so that business could obtain the garments very quickly. So Ella tried to advocate here, isn't it? Ella tried to justify, Ella tried to explain, Ella tried to put herself for a justification, isn't it? So what type of threat is here? So we have here advocacy. So when you try to be advocate, when try to talk on behalf of the client, that will be treated as a advocacy threat. Yes, Osim, that will be advocacy threat. Very well done. So we have a self-interest, self-review, intimidation, and advocacy. So what else we have here? So we missed one, isn't it? The uncle, the relationship with the uncle, with Allah. So Allah is a very close to the uncle, is a family relationship. What type of threat we have between Allah and the uncle? So the supplier and the accountant. So that is the familiarity threat because they are very close to each other. That's it. So I think like this is the 5 threads the question asking. We already found this 5 thread. Actually, we have total 5 thread from the objectivity anyway. So we have found all of this and we know the reason why it is a threat and why it is what type of threat. This type of question will become in the exam. Yes, awesome, but it's not going to be that big. They will give you a little scenario and you have to find the answer. Like maybe they'll ask for 1 or 2 threads. They're not going to ask you like 5 threads. The question will be not like that big. All right, so let's move on to the next question. What we have here, we already know these things: self-interest, self-review, intimidation. We know that. Let's try activity 4. More we practice, we'll be more clear about the threats and the safeguard. So let's try activity 4. On the activity 4, we have potential threat to fundamental ethical principle. An accountant has been told that they will be subject to disciplinary action unless they interpret an accounting standard in a particular way. Which of the following threat is the most relevant here? What type of threat we have here? We have someone threatening us. So if we receive a threat from someone, we call it is intimidation threat, isn't it? So we said this is the intimidation threat. Very well done, Ashraf. Very well done, Michelle. Let's move on. That's quite easy. So let's move on to the next one. Now we talk about the safeguard. How can we protect ourselves? Okay. So let's try to understand and try to say some safeguard. Safeguard to reduce the threat. Consider the threats facing member in practice. What safeguard should be put in place to eliminate the threat or reduce it to an acceptable level? So what type of safeguard we can put in place in order to reduce the risk to an acceptable level, or we can completely eliminate it. Now sometimes it is not very possible to eliminate or like make it zero, there is no risk. So there is always some risk, but we try to reduce the risk to an acceptable level. So let's have a look these threats and what would be the possible safeguards. The first one we have financial interest in a client. Example, owning own share. So for example, I'm going to audit, or I'm going to prepare the accounts for Tesco, and I have a 10 million pound investment on Tesco. Now, it is very, very normal. I'm not going to give the honest opinion, because if I give a negative opinion about Tesco's financial statement, maybe the share price of the Tesco will go down, and because of that, my investment value will also go down. So, if this is the situation, financial interest inclined, what I'll do, what is the possible safeguard? How can I make myself protecting, not doing something unethical? So, if I have a financial interest, what could be the possible safeguard? The first thing I can say, sell the share. It's owing shares. So, I can say sell the share. So, before providing the service, I can sell the share. So if I sell the share before I accept this engagement, so I'll have no financial interest with this company. So number one. Number two, I can say resign from this engagement. So if I don't want to sell the share, I will not take this job, because it will not looks like I will give a proper opinion, because I have a huge investment with the client company, and anything uh, uh, the report come, it will not only I'm going to give a uh, true and fair report, but also maybe it doesn't look like I'm very fair. So when the other people will know, it doesn't look like they will believe like the opinion is very accurate, because I have a huge investment with this client. All right, the next thing we have here, let's have a look. The next one we have undue independence on the client fee for income. So basically, if I'm very dependent on one client, sometimes it happen, you have a lot of client, but one of the client is very big, and for any reason you don't want to lose him. So how can you protect yourself? So the way you can protect yourself, you should have a clear policy and procedure, and you need to find it out. Are you depending on only one client? So the possible safeguard will say we should have a clear policy and the procedure. So if we depend on one client, how can we reduce the risk? So we said should have should have policy and procedure, and not depends on single client. The next one we have close relationship with the client. So if the member of the staff, they become very close to the client, so you should advise the staff not to get too close to the client. So tell the staff don't get too close to the client, because it will create familiarity threat. So this is the self-interest we have here. The next one we have, that is for the self-review. So we can see the first example we have prepare preparing a subject matter, example financial statement, and then performing the assurance work on it. So basically, I prepare the financial statement, and after that, I do the audit on that. That means like I'm the accountant, I prepare the financial statement, and after that, I'm doing the audit. So I'm checking the financial statement. So if I check my work, that doesn't make any sense, because that will be very unlikely I'm going to find a mistake on my own work. So if I prepare the financial statement, it has to be checked by someone outside the auditor. And if I am the auditor, if I am the accountant, doesn't make any sense. So I'll say use a separate partner or separate engagement team. How can we reduce the risk? So you say use separate team. Then the next one we have here, a member of the assurance team has recently been employed by the client and was in a position to exert significant influence over the subject matter. So if someone, someone just like join, if someone just join on your company and he is also from the client, and he have a very big impact, so what will happen? So you can see the question once again. A member of assurance team, so our team in the accountancy team, has recently employed by the client and was in a position to exert significant influence over the subject matter. So we should not basically, we should not keep this type of people on the assurance team. So we will say this individual should not work on the assurance team. So he should not be in the assurance team because he is from the client side and we cannot take the risk like if we have a significant influence over the decision. Then the next point we have, that is advocacy threat. Let's have a look. The advocacy threat is acting as an advocate on behalf of the assurance client in litigation, dispute, and with the third parties. So obviously the same thing. Do not perform assurance work. So we're going to say do not perform assurance work. Do not perform assurance work. Then we have a familiarity threat. On the familiarity threat, we have a member of the engagement team having a close relationship with the client. So what will happen if this is happen? A member of the engagement team having a close relationship with the client. So this is creating a familiarity threat. We cannot be too close to the client. So if this is happen, we should advise the staff. So advise staff to keep themselves independent from the client. So staff are not allowed to get too close to the client. The next one we have accepting gift from the client. Obviously, we only allowed to take a gift if the amount is not very significant. So if the amount, for example, a tea, a coffee, and we know because of the tea and coffee, we are not going to change our decision. So if the amount is really small, it's really not matter. You can take the gift. But if they give you something expensive, then that could be treated as a bribe. So when we take the gift, we have to think two things. One, the value of the gift and the nature of the gift. So for example, even the value is not very high, but nature is very demanding, it's not very easy to find. So if this type of gift someone offer, as an accountant, we cannot take this type of gift. So I would say it only accept if insignificant. So if the gift is insignificant, not very big or material, in this case we can accept the gift, otherwise no. Then long association of the senior personnel with the assurance client. So if we are very close to one client for long enough, normally it's a 7 years. So the rotation period is 7 years. So if you work with any client, it is assumed after 7 years you will be very close to that person. So that's why it said after 7 years you should change the partner. For example, in one accountancy practice we have a four partner, and I worked for one client more than 7 years. So after 7 years I have to change the client with me, and I have to give this client maybe to another partner, and I'll take some client from that partner because after 7 years maybe I'll be very close to that person. So we said say rotated. So rotate senior assurance team. All right, so let's move to the next one. And then next one we have the intimidation. The intimidation threat is when we feel pressure for any reason, being threatened with dismissal on the client engagement. So basically, if my boss, if my manager, if he threatened, if he give me the threat like I'm going to dismiss you from the engagement. So this is kind of the intimidation threat. So what will be the possible safeguard here? So we can involve with the other member. So we should involve or inform to the other member. So involve additional member to perform. Then the next one we have an assurance client indicating they will not they will not award a planned non-assurance contact if the member in practice disagree with the client on an issue. So obviously this could be possible as well. So there could be it's not possible if we don't accept the client, we cannot provide any type of services. So they said an assurance client indicating they will not award a planned non-assurance contact if the member in practice disagree with the client with an issue. So for example, if I don't agree with anything with any of the client, and the client said I will not give you any type of work. So if this is the case, obviously we cannot accept this thing. So we say clear procedure. So is required. So need a clear policy and procedure. All right. Then we have being threatened with litigation. So in this case, we consult independently with the third parties. So if there is a threatened for the litigation, we have to speak to the third parties. So speak to third party. Yeah, or maybe the professional body. If I'm not sure about anything that is relevant to the law and regulation, I can always speak to the professional body. All right, this is the possible safeguard, but it's not have to be like what I write here. So you can say the way you like. You can say this could be the possible safeguard. If you feel this is ethical, then you can always do that. All right, so let's have a look. The next activity we have, that is activity 6. Have a question. All of our lesson will be recorded on our portal. I can't see the lesson. Okay, so the lesson will be recorded on the portal. If you don't see it, you have to email to the admin, and the lady she did with that, her name is Shweta. If you have already have her email, you can email her. She'll give you the access. If not, you can let me know after emailing if she still don't upload, or if she still don't give you access. Just send me an email as well. When you email, you can CC to me. I can see that one, like she give you access or not. All right, so let's move on to the activity 6. We have activity 6 about the fundamental ethical principle threatened in the business. A fundamental principle means obviously the 5 thing, Dr. Pico. So let's have a look what we have here. You are a professional accountant working in business. A colleague has told you that one of the director has offered him a sum of money to manipulate next quarter VAT return. When your colleague refused to cooperate, the director became angry and abusive. So basically, they want you to change the VAT return, and when the colleague refused to cooperate, the director becomes so angry and abusive. So angry and abusive is kind of the intimidation. We understand this is part of our objectivity. And what we have else here. So the question here is, explain how the fundamental ethical principle could be threatened. So how many fundamental principle we have here? So the first thing is like I cannot do it because is I will not be honest if I listen to him, isn't it? If I manipulate the VAT return, that means I will compromise my integrity, isn't it? I'll compromise my honesty. So I cannot do it because of the integrity. Because if I listen, if I give the false information, I'll compromise my integrity. That will be the wrong information, false information. So I'll compromise my integrity, number one. Number two is objectivity, because it's a threat to intimidation, because he is becoming abusive and angry. So this is the intimidation threat. And finally, we have a professional behavior. We can say that as well, professional behavior, because asking by the director to change the VAT figure is not very professional, isn't it? So that will be against our profession. So obviously, like this is also we cannot do that because of our professional behavior. So we would say the behavior of the director and the submission of the false VAT return will bring the individual involved, and not the individual, the company. It will also dispute our profession. So you can say three things here: integrity, objectivity, and the professional behavior. All right, let's move to the next one. The next one we have here, that is safeguard in the business. It says answer the following question by selecting the appropriate option. A business authorization policy states that purchase requisition over 100 must be signed by two different employees. This part of the policy is primarily designed to from the pick list. So have a look which one we think. We have a three: ensure the purchase process operate more quickly, encourage employee to communicate to each other, reduce the risk of employees misappropriating business asset. So if we give the authorization policy, like for example, if it is more than £100, it has to be signed by the manager. More than £1,000 have to be signed by the director. And what is the reason behind? Because if you give the authority to like full authority to one person, maybe they're going to misuse, or they're going to misappropriate the business asset. That's the reason. So we said number three, that's the one. Yeah. Yes, very well done, Michelle. Very good, Andrew. Very well done, Ashraf. So the last one will be the answer. All right, let's move to the next one. The accountant and the client relationship. So let's have a look what we have here. So the customer due diligence, we already discussed that. Money laundering. So money laundering is basically when the client try to hide the source of the money. For example, if you have a client and if you see the bank statement, and if you see like their business, let's say the next door, they are making uh, £20,000 a month, and your client having the same business and he making like 100,000 a month. So you might think like, how come every business like on that area they make only 20,000 and he is making 100,000? If the figure is really really like unacceptable, or if you feel like confused, then you might think maybe he's involved with something else. So if you find any clue of the money laundering, so money laundering is basically the way they try to hide the real source of the money. For example, if one person is involved with the drug stealing and all the money came cash, and he want to make this money legalized, so what he do, maybe every month he puts some money on the bank. Let's say he have a business, and he basically try to deposit money to the bank and say that this money come from my business sales. And slowly every month he making this money legal, because as soon as he put the money on the business as a cash money for the sales, so this money become legal. So this is one of the way. Sometimes some of the business, they open a business only for that reason. So for example, especially like the business when it is fully based on the cash. For example, let's say the dryer, and where we wash the clothes, the drying company, so they have a lot of machine. You can wash your cloth, you can dry your cloth there. So only you have to use the change, so you have to use the cash money, and this type of machine only accept the cash. So this business 100% depends on the cash. So let's say every month, if they collect all the cash and added 20,000, 30,000 extra and deposit to the bank, and bank will understand this money come from the business. But as an accountant, if you see like, okay, the other business making 20 and you're making 100, that could be a reason. And if you're found involved with the money laundering, and this is the criminal offense, money laundering is a criminal offense, And if you help the client after if you understand it, so you are also be part of the criminal offense. And as an accountant, it will give you a criminal offense if you help the client who is involved with the money laundering. All right, so let's have a look. The activity 8, what we have here. The activity 8, we have a new client relationship. Says when accepting a new client relationship, an accountant in practice must consider. So before I accept a new client as an accountant, I have to consider what? Let's have a look what we have here. We have a how profitable the relationship will be, number one. Number two, whether acceptance would create any threat to compliance with the fundamental principle. And number three, whether the client's director meet the firm moral and ethical standard. Which one are we going to see from here? Like if we try to accept a new client, we're going to see number two, isn't it? Whether acceptance would create any threats to compliance with the fundamental principle. Even though their moral or ethical is not very important, it is important but not that important. But if it is threats against the compliance or against the fundamental principle, we cannot accept that client. We said, I'm going to check that. I'll definitely consider that before I accept any new client. All right, let's move to the next one. The next one we have number 9, that is customer due diligence. True or false? Let's have this question. Said H, a member um, Harvard, a member in practice, wishes to enter into a professional relationship with a client which is expected to last for at least 2 years. Okay. Explain whether the following statements are true or false. Harvard can verify the client identity through an informal discussion with the chief accountant. Do you think it's true? So my chief accountant know that person, and I can confirm his identity to ask like, just to call my chief accountant, and we said like, this person came to me. What is his name? What is his address? My chief accountant cannot confirm his identity, isn't it? I have to make sure I check the photo ID and I confirm his identity. So I said it's false. I have to check the identity with the photo ID. Then the next one we have, if due diligence is not possible, Harvard can still perform professional service for the client for 2 years. Is it true or false? Even though I'm not able to complete the due diligence report, but still I like to offer services for 2 years. So this is not true, isn't it? Because if I cannot confirm his identity, if I cannot confirm his other thing, I will not be able to provide any service to him. So I said, no, it's not going to work. So this is also false. All right. The next section we have here, B section, it says, as part of his customer due diligence process, which of the following action must Harvard take? Notify the police, verify the client identity on the basis of documents, data, and other information, verify the nature and value of the client asset. Which one are you going to do? So how I'm going to check the customer identity and other thing? I'm going to look at the documents, isn't it, and data and other reliable information. Other reliable information could be the DBS check, could be the information from the previous accountant. I'm not going to tell the police to check his background or like how much asset the client have. That's for the new client. Let's talk about the existing client, like one of the old client we have. So for the existing client, ongoing monitoring must be undertaken. This involves carrying out appropriate customer due diligence procedure on any transaction that appear inconsistent with the existing knowledge of the client. and keeping customer due diligence record up to date. So activity 10, let's have a look what they're saying here. Says customer due diligence an existing client. Bill and Ben Limited, a small engineering company, has unexpectedly requested your practice to help in a gambling license application and assistance in looking for a nightclub with a cost up to 10 million. Explain whether customer diligence should be carried before accepting this work. Even though they are my old small client, but now they are moving to a big investment, isn't it? Even though if I know this person, I'll again check the background, I'll check other information as well before I accept this client. This is the moral um, and ethical responsibility of an accountant. They have to check the background before they accept any type of work, especially when the value wise it's really big. So 10 million is really big amount. All right, very well done, Bubbly. So let's move on to the next area. What we have, then we have a conflict of interest. Now, conflict of interest is happen when you have a client and they are competitor to each other. For example, Tesco and Sainsbury or Tesco and Asda, they are competitor to each other. And when both of them they become your client, there is a conflict of interest. So conflict of interest means you are providing services when they are basically competitor to each other. So now for any reason you have to like if there any reason if the information passed to another uh, client, maybe it's gonna be very harmful for them, and for that reason you have to very very clear. For example, let's say if you already prepared the account for Tesco and uh, do any type of work for Tesco, and next if Sainsbury approach to you, you have to tell the Sainsbury like, oh, I am currently providing the services for Tesco. And you also need to tell Tesco like Sainsbury approach to me, so can I accept it? So basically you accept it or not, maybe it is your choice, but you have to tell both client, and so they will be aware of that like you are basically working for both client at the same time. For example, let's say one of the clients said he liked to buy one of the KFC in Oxford Street. So there is a KFC in Oxford Street that will be sale. So that is on sale. So one of the client approached and said, "Can you negotiate the price for me?" So one of the client came to you and said, "Can you negotiate the price for me because I like to buy this KFC?" And another person came next day and said, "I want to buy that KFC. Can you negotiate for me?" Now it will be very difficult for you to negotiate the best price for both person, because then you will look for your own interest. You might think like, oh, who will pay me more? I will do that for him. So that will create a conflict of interest because you cannot have a best price for both of them. So conflict of interest, when it is create, you have to try to put the safeguard. If you cannot put any safeguard, if there is no solution, if there is no safeguard, then you have to resign from that engagement. Let's have a look what type of safeguard we can put. This safeguard can include, they said, using separate engagement teams. So I will do one work, another team will do another work, so the information will not be passed to each other. So they said Chinese wall between the team. So you put the Chinese wall so that information is not passed to one team to another team. It's a retained very confidential. It's kept very confidential. Then creating different area of practice within the firm that prevent the passing of the confidential information, having procedure in place to prevent access to the information, regular interview of the application of the safeguard by the senior person not involved with this engagement, have a key judgment and the conclusion review by the professional accountant, restructuring the responsibility and the duties, withdraw from the decision making, and consult with the third parties if needed. So this is all of the thing you can do when the conflict of interest is created. Let's have a look what we have for the example for the conflict of interest. So we have one example, activity 11, conflict of interest to client. A firm of accountant has two clients that are in the same business and compete against each other. So if this is happen, so they are basically competitor to each other, and that will create the conflict of interest. So we have to try to reduce the risk to an acceptable level by following all of this. If we cannot, then we have to resign from this engagement. But the first thing you have to do, you have to tell both client you are providing the service for both of them. This is for the low fee. That's not very important. The next one is the contingent fee. So contingent fee, we already discussed that. A contingent fee is a fee that is calculated on a predetermined basis relating to the outcome of the transaction or the result of the work performed. Contingent fees are used widely for certain type of non-assurance engagement, for example, debt recovery work. So in some case, you can use it. For example, let's say debt recovery. So you have some customer who is not paying. So if you give this work to someone and you tell them like, oh, if you can if you can collect all this money, then I'll give you 50%. If you cannot collect anything, I'm not going to give you anything. So for that type of work, you can use the contingent fee, but for the accounting fee, you cannot use that. There's a risk that they give a risk threat to the compliance fundamental principle. Therefore, they are not used for the assurance engagement. So you cannot use the contingent fee for the assurance engagement. The client cannot tell you if this is this, I'll give you this. No, the fees has to be decided before the work. So the fee cannot be depend what type of work you do and what will be the result. All right, so this one we have. The next one we have one example, activity 3, conflict of interest and the fees. Let's have a look at that. Said you are an accountant in practice while advising a software developer called Joe's. He mentioned that he used to receive financial advice from a small firm of accountants in the center of the neighboring town. Joe tells you they had a very low advertised rate, offer a free initial consultant, and often claim that they were the best accountancy practice in the region. Now, it is a very, very difficult to say who is best. You can claim you are the best, but if someone asks you, how are you going to prove you are best? For example, there's a lot of company in the street, there's a lot of accountancy firm. They can say, we are the best, we are the best, we are the best. But the benchmark to prove yourself you are the best is not going to be very easy. It will be very difficult to prove yourself how you are best because most of them all they provide the same services. So we have a requirement here. The first requirement we have here, answer the following question by selecting the appropriate option. Could it be misleading to refer to your accountancy practice as the best in the region? Can you say like, I'm the best in London? So do you think it will be misleading information? What do you think? Is it true or false? Is it yes or no? So if you said I'm the best in London, so you're basically misleading the information, and this is yes, isn't it? And why is this code case? Because best is a very like ambiguous word, and it's like kind of like best is very like I would say is going to be very difficult to prove. So there is something like you can say like, okay, I have done this, so I can say my level is this. It's not like kind of someone come for inspection and they give you some rating, so they cannot just say like, okay, your rating is 3, your rating is 4, your rating is 5. So all the company we have, they provide the services, and obviously like it's not gonna be very easy to make yourself say to everyone I'm the best in this reason. So that's the reason we should not say we are the best. Yes, best is difficult to prove, that's true, but bleed, and the best is like no comparison. Yeah, it's kind of, yeah, you can say that as well, so that's true. All right, move to the next one. The next one we have here, indicate whether the statement are true or false by selecting the appropriate action. So let's find something true or false. If the fees are set too low, this may result in a reduction in the quality of work undertaken. So if you charge too little to your client, maybe the quality of the work will not be same because for example, if you know like you need 1 week to do the work, and if the client said I'll give you only uh, uh, two days money, so how much you charge for the 2 days, I will pay you for that. And you know it's not the work for 2 days, this work is for the whole week. So maybe you'll try to do it in 2 days because he's only paid for 2 days. So maybe the quality of the work will not be same. So he said it's true. If you don't pay enough, then quality of the work will be maybe compromised. Then the next one we have here, it is unethical to offer a free initial consultant. Is it true or false? It's false, isn't it? You can always offer free initial consultant. There's nothing wrong with that. Like it is not unethical. You can offer a free consultation to your client. So he said that's false. The next one it says other accountancy services should not be offered for free as the quality of the work may be compromised if accountant receive no fee or reduce fee. Is it true or false? That's true, isn't it? So the accountancy services should not be offered like for free. I will not prepare the accounts for free. I'm not gonna prepare the tax return for free. I'm not gonna audit for your company for free. Because if I do that, maybe I will do careless way, isn't it? I'm not gonna put effort. I'm not gonna do it very carefully. So maybe it will be compromise the quality of the work. So that's true. All right. So this is the end of the chapter number 2, part 1. So we'll move to chapter number 3. That will be the part 2, the same chapter, behaving in ethical manner. And that will be our next part, part number 2. And we can see some sort of money laundering, then bribery act, then the confidentiality and disclosure, this thing from here. So we'll try to do something from here as well today. Chapter number 3, we'll see how far we can do. Uh, let's do the first activity we have. The first activity we have about the financial statement and the performance. Now, the financial statement and the performance. Financial statement means your profit and loss account and the balance sheet, isn't it? So, financial statement means like how the company is performing. So, if I like to invest in Tesco, before I invest, I like to see the financial statement of the Tesco, because I don't want to invest somewhere where like I don't see like they don't have any asset, they are making the loss, they don't have any return earnings, their equity is not very good. So I'll look at the financial statement to understand the picture of the company, to understand the position of the company. Position from two sides: one's the profit and loss account, and another one asset and liability. So what is the current situation of the company, and based on that I will decide I'm going to invest this company or not. Now, if I like to see this company doing good or bad, for example, if I ask you, how do you decide, like, how do we know this company perform well or this company is not performing well? So the answer will be looking at the financial statement. So if we look at the financial statement, we can see that. We can see this one, Bubbly. You can see like audited year account, but it is not mandatory. Every single accounts don't have to be audited. So if your income is less than 10.2 million, then you don't have to prepare the audited account. So you can prepare just a financial statement and you can submit to HMRC. You only have to audit your financial statement when you reach up to a certain threshold. For the income, it is 10.2 million. If your net asset is more than certain limit, if your sector is public, so there is some criteria. Otherwise, you for the limited company, you really don't need audited accounts if the income is not really high. But if I like to see the financial position of a company, the performance of the company, I look at the financial statement. Then the financial statement, we need to understand one more thing. The business is run by the directors, not by the shareholder. Sometimes we get confused. We said the owner, the director are the owner of the business. This is not true. This is absolutely incorrect. The directors are not the owner of the business. The shareholder, The shareholder are the actual owner of the business. Director are the people who work for the company. Directors are the people who direct the company, who run the business. They direct the business. So director can be or cannot be the owner of the business, but the actual owner of the business are the shareholder. So don't be confused. Director are just employee. They're not the owner. They can be, but they don't have to be. But the actual owner for the business is the shareholder. So if someone asks you who owns this business, who is responsible to prepare the financial statement, the director, the management who run the business, they are responsible to prepare the financial statement and submit to HMRC, not the shareholder. The shareholder, maybe he live in Dubai, he don't live here, he don't live in London. So basically, the director who run the business day-to-day basis, they are responsible to prepare the financial statement. And the next point could come like, is the director or the management they receive any bonus or incentive if they change the figure? The answer is yes, that's true, because the management have a target. This is called KPI, key performance indicator. So basically, the company have a target like, if you can reach the sales for this year 1 million, then you will have 5% bonus. Now let's say the company is very close to 5 million. Let's say the company already make like very close to 5 million sale, only 10,000 or 20,000 or 50,000 left. Now the management can think like, let's do something, let's manipulate the figure so that we can have the bonus. Even though they can do one thing, before the year end, they can make some credit sale to someone. They said like, okay, someone from them, they said, okay, I'm gonna make a sales to you for this year so that my sales will reach the target. And after a few months or after a few weeks, you just return to me. So I'll say it's a sales return. So to fulfill the target, sometimes they manipulate the figure because they have their self-interest there, so they have a personal benefit from there. Then obviously, how we prepare the financial statement, the answer will be following the IFRS, International Financial Reporting Standard. So the way we prepare the financial statement, by following the IAS, that is International Accounting Standard, and the IF is prepared by the IFRS. So all the IAS, this is a law, and this law is prepared by the IFRS. Then who is the primary user of the financial statement? The shareholder who want to see the financial statement first, the owner of the company. And how do you know you can believe this financial statement? So it has to be audited. So let's have a look from the beginning. Let's try to do everyone together. This one is say, how do we know how a company has performed over the year? So how do I can find it out? If we look at the company financial statement, we'll be able to know how the company is performing, good or bad. So the financial statement will tell me how the company is performing. The next one we have here, who is responsible for preparing the financial statement? So the directors or the shareholders, who are the responsible people? Remember that the financial statement prepared by the people who run the business, so the directors. So the directors will be responsible to prepare the financial statement. Directors. You can say management as well, there is no problem, because directors are also the part of the management. The next one we have here, it says, do they have an incentive to manipulate the figure? So they get any benefit if they change the figure or they manipulate the figure? The answer is yes. Their bonuses depends on that. So they can change the figure for their personal benefit. So we can say yes. All right. The next one we have here, how do we measure whether the financial statement are reasonable? So is that financial statement prepared the correct way? How do we measure that? So we see we followed the IFRS or not, isn't it? So by following IS, yes, Babrit, very well done. So we can say the same thing Babrit said, by following IAS, International Accounting Standard. Very well done, Andrew. The next one we have here, who are the primary user of the financial statement? Who are the people who are more interested to see the financial statement? The shareholder, isn't it? The person who invests in the business, the person who invests the money. He is the first person he want to see it. So the shareholder. shareholder. All right. The next one we have, how do how do they know they can rely or trust the financial statement? How the shareholder can trust the financial statement? By auditing the financial statement, isn't it? So by the auditor. So auditor is the person appointed by auditor is the person appointed by the shareholder to check the directors doing everything correct way. So if the director do anything, if the director manipulate the figure, auditor is the person who will pick it and tell the shareholder like this is wrong, this is right. So if the auditor said everything is good, everything is true and fair, that means you can rely on the financial statement. All right, any question from here? Activity one. Anyone have any question? No? Very well done. All right, shall we take a quick break then? Let's take a break, and after that we'll come back. We'll start. Let's take a 15-minute break. We come back 7:45 and we start from here. All right, the next activity we have, that's for the gift. That's activity 2. So let's read this question and try to solve this one. So it's a gift, hospitality, and the inducement. Now, as we said before, we are allowed to take a gift as an accountant as long as it is not significant. So if the gift is insignificant, that will not have an impact on our decision. We are allowed to take that type of gift. For example, if the client bring lunch for all of the staff we have on the office, or if the client brings some coffee, if the client pay for the parking fee, so small thing, it will not have an impact on the decision. So this type of thing we can expect, we can accept. So that will be not treated as a bribe. So let's read this question. What we have here, it says Harry is a member in practice. His client Silver Limited owns a large chain of pizza restaurant. Silver Limited has recently merged with another pizza chain, so business is likely to grow significantly in the coming year. Okay. To celebrate, Silver Limited offered Harry and all other other supplier a gift voucher for use in one of the restaurant, and the value is £25. So basically, we are buying the voucher uh, for all the staff, and the value is only £25. That's the gift voucher. So let's read the requirement. Should Harry accept the gift? There are a few answers here. The first one says yes, member in practice are entitled to receive any gift offered by the client, regardless of the value of the gift. Number two, yes, the offer is made to Harry and all other supplier, and the gift is not significant enough to influence his judgment. And number three is no, the gift is significant, should could be perceived as likely to influence the judgment. So which one we think the right answer here? So we can say number two. So the offer can be accepted because that's for Harry and for all the supplier, and also the gift is not very significant, and that will have not significant impact on his judgment because of the £25 voucher for a pizza restaurant. I'm not going to change my decision. All right, let's move to the next one. The next one we have here, that is independence in practice. Now, remember, when you are in independence, for example, let's say tomorrow or next week, if I decided to audit my brother company, or if I decided to audit my sister company, even I believe I'm very independent, I'm not going to do anything wrong. I'll do I will carry on my work the way if I do for someone else. So I'll not consider this is my brother company, that's my sister company. But it will be still treat like maybe my appearance is doesn't look like I'm independent, because when I'm going to audit my debt company, even though how independent I am inside, but it will be not look like independent from the outside. So when we'll be providing any services, it's not how I feel only, it also has to be look like independent. So even though I just feel independent inside, it is not enough, it has to be look like independent from the other side. So we have a question here. Let's have a look. What is the question? The question here is independence in practice. A member in practice on an assurance engagement must be independent on their client. So the requirement here, which one of the option best indicate what independence means to an AT member in practice? Independence in mind, independence in appearance, and independence both mind and appearance. What do we think? It should be both mind and appearance, isn't it? It's not like what I feel only, it also how the other people feel. So it should be both. All right, let's move to the next one. The next one we have the true and false. Let's have a look at this question. Indicate whether the statement is a true or false by selecting the appropriate option. The description, true or false. Member in practice must demonstrate they are independent of assurance client by applying rigid set of rules. Is it true or false? Remember that ethics is not a rules. Ethics is a guideline. Ethics is not a law. Ethics is not something that give you a criminal offense. For example, as we discussed last week, if we keep all the computer open when we finish our work, this is unethical, but it is not illegal. Because of that, it will not give me a criminal offense. So ethics is not a set of rules. We don't have any book of ethics, but it is a guideline. You should behave like that way. And circumstance to circumstance, situation to situation, the ethical judgment could be changed. So when you will be in a situation, you have to decide what will be the best action on that situation. So it's like a guideline. You should act like that way. Now, for you, the situation could be something else. For me, something could be else. For example, let's say I know I'm not going to take any gift from client, but for example, if the client give you something, and because of this gift, if it is if you feel like, even for some people, let's say 500 pound will not change the decision, and for maybe for some people maybe 100 pound, they'll change the decision. So it is the individual person. So let's say I cannot just say like, oh, 500 pound, that will definitely change the decision. Maybe this 500 pound is still not change the decision of yours. So still you give the independent report. So that's why it's adjustment. It's a set of guideline. It's not a rules. So you're going to say it's false. It's not a rules. It's basically the guidelines. The next one we have here. Member in practice must demonstrate they are independent of assurance client by taking a conceptual framework approach in independence. This is true, isn't it? So, member in a practice must demonstrate they are independent of assurance client by taking a conceptual framework approach to the independence. So, you have to make sure you're independent when you work for the client. So, that's true. Let's move to the next one. The next section we have for the Bribery Act. So, let's read a little bit about the Bribery Act. What we have here, Bribery Act 2010. How to deal with gift, hospitality, and inducement has long been an issue, as it can sometimes be difficult to draw a line between legally developing and maintaining mutual business relationship and actual criminal act of bribery and corruption. Bribery occurs when a person offers or a promise a financial or other advantage to another individual in exchange for improperly performing a function or activity. The Bribery Act 2010 is UK legislation that came into force 2011 and applies to both individual and organization. The act make giving and receiving and offering bribes a criminal offense. The Bribery Act 2010, Ministry of Justice 2010 introduced four offences to the UK law: bribing another person, being bribed, bribing a foreign official, failure to commercial organization to prevent bribe. The penalty imposed if individual or company are found guilty of bribery are severe. Individual may be imprisoned for up to 10 years and face an ultimate fine. Company may face an ultimate fine along with bad publicity, loss of reputation. So the individual can be in jail up to 10 years, and the company will definitely have an unlimited fine, and they will definitely lose the reputation. All right, let's move on to the next activity. Activity 4, what we have here: factor to consider when accepting hospitality. You have you have been recently employed as a payable ledger clerk for a construction company. Your manager has been granted 10 tickets to attend Ashes Test match at Lord's Cricket Ground, London, in a corporate hospitality box by a consultancy firm that is bidding for the contract to design your company new computer system. So obviously if you offered some tickets and that is corporate hospitality box, it look like it could be expensive, and that is by a consultancy firm and who is also looking for a bidding for a new design for the computer system. So let's have a look. What is the requirement? Describe the factor that will determine whether there is an ethical issue arising from granting the ticket. So what do you think? If we accept the ticket, is there any ethical issues? So two things we have to consider. The first one, the value of the hospitality. So the value of the gift. So if the value of the gift is really high, then obviously we cannot accept it. That will be treated like a bribe. So number one. Number two is the circumstance. So how demandable it is. So for example, if the gift or whatever you're getting is really demandable and everyone looking for that, it's not very easy to get. So that may be very hard, like for anyone to get. So we can say it's not something is we can accept it very easily. So these two things we have to consider: either the value of the gift or the circumstance. So obviously in this case, the fact that the host is bidding for a major contract might suggest attempt to influence the decision, isn't it? So he's looking for something and obviously he might do this thing so that that will have impact on the decision. And this is the corporate hospitality that could be expensive. And of course the situation here is like he looking for something. So in this case it will be not very good to accept this gift. Maybe that will be treated as unethical because it might impact on your judgment. All right, so the next one we have identify the bribe. So let's try that. That looks like more scenario based question. So let's have a look this question. Identifying the bribes, explain if any of the following scenario would constitute an offense under the Bribery Act 2010. So we need to say, do we feel is there is a bribe going on there or not? Let's have a look the first scenario. You met an old friend in a bar who worked for another audit firm. During your chat, she offers to buy you another drink if you would explain how a spreadsheet formula could be used in her audit work. what do we think? Do you think is a bribe or it's not a bribe? So the colleague said, I will buy a drink for you if you tell me how the spreadsheet formula work in order to do the audit work. So I think like if you have a friend, you can ask this question, like if you are from the same field, you can tell like, how do you do your audit work? Can you tell me the formula and I'll buy a drink for you. So it's not something that is basically for an individual purpose or he tried to gain something from you. So I would say like that is this is not relevant to a specific circumstance. So we say it's not a bribe. It's not a bribe. So we'll not consider this one as a bribe. Very well done, Luis. Very good, Sarka. Very good, Mohammed. Move to the next one. The next one we have here, the next scenario said you are an accounting technician working in practice and a senior partner from another accountancy firm telephone you and offer you a seat in a box at a Premier League football match. You wasn't sure at the time as the line was bad, but the partner also mentioned something about the client list. So basically, he offering you a Premier League football match ticket, and that's quite expensive, isn't it? The Premier League football ticket is quite expensive, and also he said like he was talking about something the client list. Maybe he trying to get something from you, the client list, how many client you have, their address, and everything, and that's the reason he like to buy a ticket for you for the football match. And we know the Premier League ticket is quite expensive, so we said that might be treated as a bribe, so should not accept it. So he said it will be treated as a bribe. So he said yes, it is a bribe. All right, the next point we're going to see, that is we have here, your team has been working long hours to ensure a deadline is met for the submission of a client financial statement. The financial statement was submitted with a day to spare. The client admits that it was his bad record keeping that caused his delay the submission, and as a thank you insist on taking the whole team for a chicken meal. As your team has 20 members, this could be expensive for the client. So someone basically tried to give you a thank you and said, I will take the whole team for a chicken meal. And obviously, there's a 20 people that could be expensive, but it's not going to impact your personal decision, isn't it? So it doesn't look like it is a bribe. So we'll say it probably, it probably not seen as a bribe. So we said no, not a bribe. Because if you take everyone to for a chicken meal, it's not going to impact my decision at all. So let's have a look. I have a question from Sarka. It is past the decision moment, so not a bribe. Yeah, that's correct, Sarka. Okay, let's move on to the next one. The next one we have here, one of your client is in the process of applying for a large bank loan. Although you have only known the client for a month, the client has asked you to supply a reference to the bank stating that you have known her for 3 years. The client has mentioned she has a luxury apartment in Spain that she normally lets out to the holidaymaker, but you are welcome to use this free of charge during August. So we can say this is a bribe, isn't it? Obviously, like the first thing, like we don't know this person for 3 years, but he want me to say something wrong or she want me to tell something. That is caution my integrity, isn't it? And top of that, holiday in Spain, that will be quite expensive. So I would say this will be treated as a bribe. That will be treated as a bribe. All right. So that's it. Any question anyone have from this bribe activity? So if this question come in the exam, can we identify? We'll be able to identify what is bribe and what is not. So we have some safeguard question. We have done this before. So let's move on to the next one. Okay, we can try that. So inadequate information and the consequences. Mercy, a professional accountant in practice, has knowingly prepared a set of financial statement for Dan on the basis of inadequate information. So information is not complete. So there is a missing of information, and he prepared the financial statement based on this information. So you have a requirement here. The requirement here is answer the question below regarding the above scenario. Which of the fundamental principles are most threatened here? So if we prepare the financial statement without having a proper information, what is the fundamental principle we have? Remember the fundamental principle we have? So we have a uh, Dr. Pico. So what is relevant here? So the most relevant here is which one? Professional behavior, due care. Okay. So due care is the most risk here, isn't it? So without having sufficient information, if I prepare the financial statement, the professional competence and due care is more relevant here. Also the integrity, isn't it? I cannot prepare the financial statement without having the complete information. So integrity will be also threatened here. And also finally the professional behavior. So it's not very professional if I do that. So this three you can say is relevant. So due care, then plus integrity, plus professional behavior. All right, the next one we have here. If Dan receive a fine due to due to this financial statement, on what ground could Dan receive compensation from Mercy? So what ground we can, for example, if we don't do our work properly, and if someone claim, what ground they can give the compensation? So that will be breach of contract through professional negligence. So professional negligence. So if I don't do my work properly, I might end up with fine. All right, so let's move on. So we have a fraud act. So the fraud act is all about if you give the false information, then failing to disclose the information, and abuse your position. So if you do all of these three, that will be treated under the fraud. So you'll be considered under the fraud act. Okay, so let's have a look. One of the activity 8 we have here. So in this activity it says types of fraud. Julia is a member in practice. So Pickering is a landlord with 10 properties which he rent to other businesses. 6 months ago, he transferred 20,000 to Julia to be used for repair and other expenses that may be needed to maintain his property while he is in overseas. Pickering has returned to UK and is surprised when Julia informs him she has now hold only 1,000 of his money. Requirement under the UK Fraud Act 2006, which is the most likely offence Julia has committed here. fraud by false representation, fraud by failing to disclose information, or fraud by abuse of his position. So, which one we think here that is more relevant for this scenario? So, we'll say the third one. Yes, very well done, Luis. Very good, Catherine. So, fraud by abuse the position. Because of the position, you make the fraud. All right, so let's move on to the next point. The next point we have handling the client money. So handling the client money is very common for the accountant. So when you will be the accountant, most of the client will tell you like uh, every time when you pay the tax, every time you claim the tax, the client will tell you you can do it by your bank account. So as an accountant, you can claim the money from HMRC for the tax refund or for any other purpose on your bank account, or you can pay from your bank account to HMRC. So sometimes the client don't want to take the risk. Client said like, I don't know where to pay the tax, which account I should transfer the money. So can you do that for me? So the client said, I will transfer the money to your account. Can you pay all this HMRC and the pension, everything from your account? This is very common. So sometimes you're holding the client money. So let's have a look. Confidentiality and disclosure. So we know this one. So non-compliance and regulation. So let's have a look on of the example for the duty to confidentiality and the disclosure. Activity 9 says Amir. Amir is a professional accountant in practice. He has several pieces of confidential information about one, his client Derek. So Amir is an accountant and he holds some information for his client, and his client name is Derek. Requirement state whether it may be appropriate for Amir to disclose the information in the following circumstance. So in the following situation, or in which situation Amir is allowed to disclose this information. The first one we have here, that is disclosure if Derek has broken the criminal law. Is it yes or no? So if the client broke any criminal law, for example, if I know my client is involved with the money laundering, I am allowed to share this information with a third party, even though it is confidential. So I would say yes, yes. And the next one we have disclosure that is not required by law, but which is authorized by Derek. Yes or no? So even it is not authorized by law, but the client said yes, you can disclose this information. For example, sometimes you give a very good service to your client and you want to use the client name on the website. So you can tell your client, I like to show you new real name and the company on my website so that people can see and people can have more confident about my services. So if the client said yes, if the client give you permission, you can do that. There is no problem for that. All right, so we're going to stop today here, and we have one more lesson for the ethics. Hopefully try to finish with the next lesson for the ethics before we move to the next lesson, that will be spreadsheet.